Welcome back to this week's edition of the Risk Spotlight Operational Risk News Update. My name is Emily Jones, and today I'll be bringing you essential updates and insights from the world of operational risk, drawn from the past week. All information shared here is sourced from the Risk Spotlight Portal, the premier forward-looking service dedicated to operational risk content. Let's get started. The first update is about a new malware variant threatening mobile banking security. A new variant of the Octo malware family, called Octo 2, has emerged as a significant threat to mobile banking security worldwide. This advanced malware enhances remote access capabilities, reduces latency during remote control sessions, and employs sophisticated obfuscation techniques, including a domain generation algorithm for dynamic command and control server address changes. Octo 2 has been deployed in targeted campaigns across several European countries, specifically Italy, Poland, Moldova, and Hungary. Cybercriminals have been disguising Octo 2 as legitimate applications like Google Chrome and NordVPN. The malware's ability to intercept push notifications from select apps indicates specific targets of interest for its operators. The next update is about the G7 Cyber Expert Group, CEG, issuing a warning about the potential cybersecurity risks posed by quantum computing to the financial sector. Chaired by the U.S. Treasury Department and the Bank of England, the group emphasizes that quantum computers could break existing cryptographic methods, potentially exposing financial data and customer information. While the exact timeline for quantum computers to enter the market is uncertain, there's a possibility they could emerge within a decade. The G7 CEG advises financial institutions to develop a better understanding of the risks, assess quantum computing risks in their areas of responsibility, and develop mitigation plans. The National Institute of Standards and Technology, NIST, released an initial set of quantum-resilient encryption standards in August, with more expected in the future. Experts stress the urgency of addressing this issue, as malicious actors may already be employing harvest now, decrypt later strategies, which could compromise currently secured data in the future. The next update is about international data transfers. International data transfers remain under scrutiny in the EU and UK, with organizations facing significant challenges since the invalidation of the Privacy Shield in 2020 and the introduction of new standard contractual clauses in 2021. Companies must implement appropriate transfer mechanisms like EU-approved SCCs, the EU-US Data Privacy Framework, or the US-UK Data Bridge to ensure compliance with GDPR and protect personal data during international transfers. Failure to comply can result in severe penalties, with fines up to €20 million or 4% of annual global turnover. Regulators are actively monitoring compliance, particularly focusing on transfers from the EU to the United States. Organizations are advised to conduct regular transfer impact assessments, implement robust contractual provisions, and have alternative mechanisms in place to mitigate risks associated with potential invalidation of transfer frameworks. The next update is about the EU's Digital Operational Resilience Act, DORA. The act aims to enhance the stability of financial markets by regulating IT services that support critical functions in financial institutions. Effective January 2023, EU financial institutions and their IT suppliers have until January 2025 to comply with DORA's requirements. The regulation also applies to non-EU companies providing delegated functions to EU financial institutions. Penalties include substantial fines, sanctions for board members, reputational damage, and potential criminal penalties. DORA mandates financial entities to implement robust ICT risk management, incident reporting, digital resilience testing, and third-party risk management. The next update states that the European Central Bank, ECB, has begun issuing fine notices to banks that fail to meet climate-related expectations. The fines aim to encourage banks to adopt more rigorous climate risk management practices. The biggest losses were projected to occur in Germany due to the country's economic sector's heavy reliance on biodiversity, according to the ECB. The ECB emphasizes that addressing climate risks is essential for the long-term viability of the banking sector. This initiative reflects growing regulatory pressure on financial institutions to align with environmental goals. The next update is about adopting tighter controls for buy now, pay later (BNPL) providers. Several Senate Democrats have urged the Consumer Financial Protection Bureau, CFPB, to implement stricter regulations for BNPL providers in the United States. In a letter to CFPB director, they propose treating BNPL lenders as credit card providers under existing laws. The senators recommend three key measures: implementing credit card-like protections for consumers, including monthly billing statements and dispute resolution mechanisms, bringing large BNPL providers under CFPB supervisory oversight, and collecting and publishing more data on BNPL usage, such as delinquency and default rates. The next update is about an Iranian state-sponsored threat group, UNC 1860, likely associated with Iran's Ministry of Intelligence and Security, is acting as an initial access broker for hackers targeting governments and telecommunications organizations in the Middle East. The group employs specialized tools and passive backdoors, including a repurposed Windows kernel mode driver from legitimate Iranian antivirus software. The group uses web shells and droppers to compromise servers and implements custom base64 encoding and XOR encryption to evade detection. Their operations have focused on scanning and exploiting vulnerabilities in Saudi Arabian IP addresses, as well as validating credentials for Qatari and Saudi Arabian entities. Now let me provide a quick update on key operational risk loss events that were reported in the media last week. The first update is about Vanguard Investments Australia, which has been fined a record $12.9 million by the federal court for misleading claims about the environmental, social, and governance (ESG) screening of its ethically conscious Global Aggregate Bond Index Fund. This penalty, the largest in Australia for greenwashing, followed legal action from the Australian Securities and Investments Commission, ASIC. The court found that approximately 74% of the fund's securities were not properly screened against claimed exclusions, such as fossil fuel companies. The next update is about a lawsuit against Visa. The U.S. Department of Justice has filed an antitrust lawsuit against Visa, alleging that the company unlawfully monopolizes the debit card market by suppressing competition and imposing excessive fees. Visa controls over 60% of U.S. debit transactions, generating approximately $7 billion annually from processing fees. The lawsuit claims Visa penalizes merchants for using alternative payment networks and incentivizes potential competitors to refrain from entering the market. Attorney General Merrick Garland stated that Visa's actions inflate costs for consumers and hinder innovation. The next update is about a cyber attack on MoneyGram International. The firm experienced significant service disruptions due to a suspected ransomware attack reported on September 20, 2024. The company acknowledged a network outage affecting multiple systems and launched an investigation with cybersecurity experts and law enforcement. The attack impacted global transactions, particularly in countries reliant on MoneyGram for money transfers. Experts warned of potential financial losses and damage to customer trust. MoneyGram worked diligently to restore its systems and resume normal operations. The next update is about a cyber attack on Russian banks. Ukrainian military intelligence executed a cyber attack on September 23, 2024, disrupting operations at two major Russian banks, Rosalkhozbank and Moscow Credit Bank. This attack rendered their internet banking services and mobile applications inoperable, with no timeline provided for restoration. Huer emphasized that all financial institutions are legitimate targets due to their role in funding the Russian military. Previous attacks included hacks on Russian TV servers and digital signature certification centers. And there you have it, a whirlwind tour of last week's operational risk landscape. If you want to read more about the topics I have covered and review additional content on emerging operational risk topics, then please log into the RiskSpotlight Portal if you are a subscriber, or go to riskspotlight.com to sign up for a free trial. Thanks for tuning in, and until next time, stay safe and keep those risks in check.